Very good Monday evening to everybody who's watching. I'm Nadia Hassan, she's Charlotte Chong, and we are looking at what made the news today. This came by our door a little bit late, but it was always good to see earnings. I think it's starting to pick up as everybody starts to release. Alliance Financial Group Bhd, AFG for short, it's up 0.85%, 3 ringgit 56. And what happened was, of course, net profit increased 7% to 135.6 million. And this was on higher interest and non-interest income. And the good thing is lower bad allowance growth. If you're interested in banks, that's always good words. They basically supported bottom line growth all overall.
Well, news came in a little bit late at 4 o'clock today, like what you say. For the cumulative 9 months ended December 31st. Alliance net profit actually declined to 392.19 million ringgit from 437.51 million ringgit a year earlier. Revenue dropped as well. But what is interesting is Chief Executive Officer Joey Conright actually said in a separate press statement, he said that he will continue to strengthen his balance sheet by growing its best performing segments and optimizing its profit and loan mix.
In almost like territory where he basically says expects the operating environment to remain challenging. That is needless to be said. I mean, like, come on, if you're looking at financial groups, holy cow, HSBC themselves clocked 1.3 billion loss in the fourth quarter, which actually took a lot of people, by surprise. HSBC clearly is the big dog out there. So if they are the ones running into trouble, we already have talked a lot about how European banks like Societe Generale have all seen really, really bad numbers that caused that rout a couple of weeks ago. It's just going to be kind of tough for them. So where is their niche? Where is their lie? Because we know where public banks' niche lies. These guys will still have a tough time ahead.
But I think Alliance, they are doing pretty, not very, very extremely good, but pretty decent, because when we look at what happened last year, a lot of banks, they've been laying off people, started with Standard Chartered, and we saw CIMB as well. So I think AFG is still struggling pretty good. Now, TA Research quickly rolled out a report today, this evening, and they maintained a whole rating on AFG with higher TP of 3 ringgit 70 cents. And they say year-to-date ROE of 11.4% is expected to fall short of its forecast of 12.2%.
And as we also said, they pointed out what we also figured out, where the fact is, as loan growth will ease because people will cut back on the the big ticket items, passenger cars, properties. All of that is going to affect not just Alliance, everybody else as well, unless you are the public bank model where you do have very, very strong SMEs and very, that's where your comfort is. Strong SMEs, but no ATMs.
Now, UOB came in from a research report last week. They are more positive. They say they upgrade the rating to a buy call with higher TP of 3 ringgit 95 cents. They say given its relatively small size of AFG is in a very strong position to execute a successful yield.
UOB will have to see whether or not they do an upgrade report tomorrow. Well, update report
probably
tomorrow. But yeah, Alliance numbers, one thing to look out for. Finally, talking about brokers, we chose IOI Corp today, 0.84% down in contrast to what Alliance had. TA Research, we're still going with them. Sell rating, they didn't change their TP at all of 413. At the moment, it's 471, by the way, so it's still quite a little room. MIDF, they are more pessimistic, of course. They have buy, and their TP is 540.
Now, what TA Research said is it expects the downstream margin to remain challenging in the next quarter. And they see in audio chemical subsegment, it expects margin to remain thin due to surplus capacity. But having said that, they think that COQ price will trade higher this year, calendar year 16, to 2,700 per ton. However, the low fresh fruit bunch production due to the El Nino effect and lower palm oil stock should give them some support for CPO prices.
They've been saying that for many months though, and I've yet to kind of see it. And I think a lot of people, you do have to see. I mean, never mind. We do understand that the weather's pretty much messed up, So I don't know if their assumptions as go, but MIDF definitely, they think the first half earnings were definitely above expectations. And yes, look at what went up, net profit, of course, went up something ludicrous like 3,600%, although up was 3.4%. I do have a feeling that was, and as we read the thing, it was foreign gain, right? It was a foreign, that is non-cash, it's one-off, it's not something to be repeated, so you can't always count on that. But they do believe that their downstream division should be better in 2016. They still have the faith.
But I think probably the weaker ringgit will actually give some support of the CPO prices as well. Now moving forward, IOI Corp actually expect plantation segment to perform satisfactory in the remaining 2 quarters of this financial year. And on the effect of El Nino and oil palm fruits production this year, palm oil price has been trending upward and is expected to remain firm for the rest of the year. That's what they say.
Yeah, well, MIDF still believes that the outlook is positive for them with all that news that they actually said. They say it should continue to track new Sharia funds and that core net profit, that means stripping out all the extraordinary gains and, frivolous stuff. Well, not frivolous, but extra stuff is still sort of kind of strong for them, 22% year on year. Here's the thing, plantation companies, would you at 5, how much is this? 471. Bargain, not bargain?
Risky. Because the thing is, right, what happened was previously Human Resource Minister said they are going to bring in more Bangladeshi workers, which is quite crucial for all these, which is very crucial for all these plantation companies.
78% actually, most of them say. I don't know, some said no, some said yes. Some said... Yeah, I hope there's a central depository or suppository for all of this. But anyways, this is to wrap up for us, and we're looking at IOI, and the two reports have very, very different outlooks. TA, bull, bearish, definitely sell, and MIDF is definitely the buy call of the bunch. But I think regardless, we can all agree that plantations is going to have a tough time. It's just like most businesses, who comes out on top. That's all for us today. I'm Nadia, she's Charlotte, and if you actually want more news, there's the edgemarkets.com. Sorry for the little outage earlier, but it's back up and running. And of course, it's Monday, so the brand new papers are out, and you can still smell them on your fingers if you go and read them long enough. But yes, have a good week, guys.